I'm very pleased to welcome you to this webcast, which is with Chester Nziradzemhuka. And Chester, in a moment, we'll hear a bit about him, but the title of our talk is Fostering a Globally Inclusive Digital Economy. The focus is around the idea of responsible banking towards the United Nations SDGs. The proposal is that it's not just good for individual societies and citizens around the world, it's also good for business as well. So I've welcomed you. I've welcomed Chester. You might just wave, Chester, so that we can see where you are on the screen. There he is on my screen. Chester's over on the left-hand side. I'm not quite sure where he'll be with you. Let me move to the next slide, please, Sinead. Now then, let's see how. On my screen, I've moved to a slide entitled Meet the Specialist. Is that what you see, Chester? Yeah, okay. Well, there is Chester. Yeah, the picture that I can see in the top left-hand of my screen looks pretty like him. So we'll accept that that's bona fide. And a little bit about his background. He's the Director for Country Business Development at Mastercard, Botswana and Zimbabwe. We're very proud to acknowledge that he's a graduate of our MBA, which is the Chartered Banker MBA. He also, of course, holds the status of a Chartered Banker. And you'll see there, and this is what we're going to talk about in our time together, Chester's been on a journey of over 25 years and across a lot of different aspects of things that are relevant to us, particularly with his background in digital transformation. It faces us all, whether we like it or not, as customers, as employees, as organizations. We need to understand what is appropriate for the target audience that we're reaching out to and some of the challenges along the way. So as in this bottom of that first paragraph, it says, Chester says of himself, embodying my dedication to fostering an inclusive digital economy that serves every participant in our vibrant financial environment. We've had registrations from 36 countries. So we're very pleased to welcome people. I'm not going to go through all the countries. That would take quite a time. But it's, I think, testimony to the attraction of the topic of Chester as the speaker, but also of our global reach from Bangor here in rural North Wales, reaching around the world. Some of these people, I recognise the names, are graduates keeping in touch and professional updating. Others may well be people who have an interest in studying with us. Chester did the Chartered Banker MBA, as we'll see at the end. We also have a Financial Crime and Compliance MBA and a new illicit finance. But enough of that. What I propose to do, just to set the scene relatively briefly, because the main thing is to hear what Chester's got to say, I'm going to show you a few slides. It's not intended to be death by PowerPoint. The intention is to show you some of the materials that we use, where you to come as a student onto our programs, and generally to set the scene. Okay, let me see. I'm moving the slides then, Sinead. I'm on this slide now, which is entitled A Call to Action. I've entitled it A Call to Action, and the potential for digital technologies to assist in the United Nations Sustainable Development Goals. Most of us are probably aware of the UN Sustainable Development Goals, that there should be no poverty, no hunger, people should be able to access clean water, they should have the opportunity for gainful employment, for education, etc., etc. I found this report in the World Bank last year, November time, and it talked about digital technologies contribute to 70% of the Sustainable Development Goals. And the finding in this World Bank, you've got the reference at the bottom, you can have a look at it yourself. Countries with stronger digital infrastructure, i.e. the layout in terms of masts and all sorts of things and networks, and digital affordability, which we'll see later is a big challenge, have made 40% more progress towards achieving the SDGs compared to their peers who don't have digital infrastructure. So it's clearly important. The question is, how do we make use of it? A 10% increase in broadband penetration within the population could increase GDP by 0.25%. Sounds small, but there's a huge knock-on effect there afterwards. So if we take these Sustainable Development Goals that the United Nations has put together for all countries, for all industries, for all people, and try and take it into an industry perspective in the financial services industry, on the left-hand side, I won't go through it in detail, but the UN Principles for Responsible Banking, how institutions ought to behave to be responsible. And on the right-hand side, from our partner, the Chartered Banker Institute, who award the Chartered Banker status, which Chester has, and more than 1,000 of our graduates, is the idea of taking it down to an individual. It's okay to have the SDGs for all industries. It's good to have principles for responsible banking, a single industry. And then what about you and I as individuals? Well, the responsible banker will be a digital banker. That's good because we're talking about digital technologies. We'll think about sustainability for themselves, their own organization, their customers. We'll behave in an ethical manner and we'll be future orientated. We're not going to look at this in great detail, but I've chosen, this is one slide from our module, Aspects of Global Banking, which I contribute to. That module in the Chartered Banker MBA talks about private banking and wealth management, retail banking, Islamic banking and finance, and those populations who are unbanked or not yet banked. And you'll see that I've chosen to circle the word trust. We're not going to go through this slide in detail, but customers look at our company to see what we offer in comparison to the competition. And they choose us if we have a better solution that meets their needs, if they feel they can trust us. And we'll come back to that in a moment. We could ask the question, can a nation look at other nations and then do exactly the same? Has every nation the same sequence in financial services industry development? The reference is there if you want to have a look at it. It's actually in the UK. It's evidence from the sequence in the UK. And you'll see that it goes from barter through coins, all the way through checks, banknotes, etc. The automated teller, ATM, and then a range of forms of credit cards, debit cards, online banking, mobile banking, etc. In the UK, we're at the stage where for some years now, we've been closing physical bank branches. Physical bank branches, not enough people going to the bank. And also reducing the number of ATMs, not enough people using cash. We're not quite in the cashless economy yet, but many people use digital wallets to pay, something on their phone, etc. And it's not to be presumed that every country will follow in the same sequence. Some may leap through some of these stages. So asking the question, is there a single one-size-fits-all solution? Which is what we do in our modules, because we have people from around the world. As I said, there are registrants for this webinar from 36 countries. Recently, we had some bankers from Ethiopia came to Bangor, and we talked about where their industry was up to. Now, there were previously fairly large proportions of their population who were not banked or unbanked, but now that's changed because technologies offered opportunities. The financial services industry has been liberalized, but also so has the telecommunications industry. So now people can reach out, but at the same time, they're still expanding using bank branches. One of the big challenges around the world, as Romanovich said in the Financial Times article at the bottom, is financial services have historically largely been designed to serve people with predictable lives, predictable incomes. And that's not the reality for everybody, in the UK or indeed elsewhere. And there's also the tension that says shareholders of companies say, well, we want to focus on our customers and products that deliver best returns, that deliver best profits. Why should we bother with providing products which we don't make profit on in the short term? Well, of course, it's about speculating and drawing those customers, the unbanked, into our offering. What can we talk about in terms of inclusive digital economy? Well, it could well be that we think that there will be certain segments of the population who will be keen to enter. Could be younger people because they're confident with technology, and that's the spectrum on the right-hand side of the diagram. It divides the human life cycle up to a number of stages. I won't tell you where I am. I'm not in the first one on the left-hand side. The diagram on the left-hand side is about there will be some people who are innovators. They want to be first, and they'll pick up new products through the digital economy, and there'll be others who lag behind. The diagram that talks about segmentation is good because it talks about age. Behind that is also income. Behind that is also where they're in a partnership, a relationship, may have children, are they working, are they retired? But of course, the one thing it doesn't show is gender. And the little data book on financial inclusion, 2022, recently talked about gender gaps. And I'm quoting from it there, financial inclusion helps to make individuals, families, societies more resilient. When a woman gets an account, she builds savings, spends on her children, etc., etc. But at the same time, although millions of women have accounts around the world, many of them do not have digital IDs, which are what's required, or they may not possess a mobile phone. So there's a number of challenges in here along the way. Well, customers are, in terms of the circle I had a couple of slides ago, the question is trust. Do I trust? Do I think the technology is reliable? Do I think that it'll be secure when it's handling my personal data? And the World Bank stated that during COVID period, which affected us all, the number of fraud attempts increased significantly, partly on what they call digitally naive customers. Customers who couldn't go to their bank branch anymore, were forced to use technology to access financial services. And the World Bank says, well as using technology, we have to make sure that countries have policies, regulations to protect consumers. The question about technology in the title is, does technology fall into the pull or the push? The pull is the customer pulls it towards them because they see a benefit in it. The push is the provider says, we haven't got enough customers coming to bank branches, we're going to close them, we're moving to technology. And some people go, I'm not confident, I'm not comfortable. One of the big challenges is how can we verify who the customer is when we do things digitally? The challenge of identifying the individual. In many countries now, there's a need for a national digital registry, partly because governments want to make payments to citizens and they want to do it digitally. So in order to do that, they have to have a digital ID. There's always the problem, of course, that we're concerned as financial institutions to make sure that we do know who we're dealing with and we're not facilitating money laundering. The problem in low-income citizens in any country is partly their access to smartphone technology, which could be subsidized by banks or governments. And why would they do that? Well, they do that because it reduced the cost of their service provision. They don't need so many physical offices staffed all the time. But there is an issue of trust. Trust in who's the provider. Is it a traditional financial services provider? I've been to their bank branches. I know they exist. Is it digital only in terms of fintech, mobile money operators, etc.? and how to play in that space when some of these providers would find it very difficult to get a banking license in some countries. So it's about fostering a globally inclusive digital economy. I think it's proven that digital technologies can help countries, societies progress in the Sustainable Development Goals. The response, what should the response be? Well, I think we do need technology infrastructure. That was part of the World Bank report. But we also need appropriate financial services offerings, not just designed for people who are traditional customers. We need to be able to determine who is the consumer identity. We need to educate those inexperienced customers about financial services, but also about technology. And we need to have appropriate regulation and consumer protection so that the customer can have confidence and trust. Above all, we should make sure that as we try to avoid financial exclusion, we don't substitute digital exclusion because people are not comfortable, educated, or can't access the technology. Well, that's enough by way of setting the scene. Now it's over to this discussion between Chester and myself. I'll leave that picture on the screen while I pose a couple of questions that Chester and I have shared beforehand. And with regard to you asking questions, there is time at the end for you to ask questions. I think the best way to do it is actually to put some questions in the chat area. Okay, so you could type in the chat area and I can pick them up, and I'll do that appropriately at the end. Alternatively, at the end, after Chester and I have discussed things, then we can you can unmute your microphone, but let's see how. I will still be looking in the chat area. Chester, it's great to see you. I don't know if that's a screensaver behind you like mine, or if actually that is your genuine office. It's difficult to know where people are these days. Are you in Harare?
Yes, I am, Stephen. I'm in Harare. I'm actually working from home, so that's a screensaver behind me.
Okay, I have been to Harare some years ago and did some workshops there. I had a great time. Who knows? I may return. So the your background is ideally suited to this discussion, and I think perhaps we could start out by me asking you about the current situation in Zimbabwe with regard to populations inclusivity. How many of them are online? Would you say that the majority of people are online for banking or indeed for any other kind of services they may use technology for?
No, thanks very much, Stephen. So yeah, I think definitely there is a lot of work that's been done in Zimbabwe, partly obviously due to limitations. We've been through hyperinflation environment in Zimbabwe, the 2008 era, where cash became a problem and digital adoption was more of a forced arrangement. And we found a number of our telecom players coming into the space and regulation changing towards bringing them into the space of providing financial services. And banks naturally also had to transition towards use of digital technologies, mobile banking. So there was that acceleration. In terms of inclusivity, again, traditional banks have largely been rigid in terms of where they are located. You spoke about branches earlier and the movements within the UK environment. We haven't seen much growth, obviously, in the excluded sections of the country, but mobile network operators have played a huge role in bridging that gap by extending some of their services to rural and growth point areas where people could transact. Merchant services could actually be delivered. And that actually speaks a lot more to the SDG 1 and 10, where in terms of reducing inequalities. So that's where we have seen the likes of EcoCash, One Money, which are the big mobile network operators reaching out to the unbanked populations and bringing them into the formal economy.
Great. I mean, that's a neat summary, referencing SDG as well. Thanks for that. Yeah. But paralleling many other places. In terms of cards, which is Mastercard's principal activity, who you work with or for, how has that been? That was already well developed before the this transition that you talked about earlier?
Yes, so you'll find, yes, the scheme players have been in the country because we do have a section of population that does travel outside of the environment. And also there was a development in 1994 of bringing interoperability within the country. We now have a national switch called ZimSwitch, where every bank, it's part of legislation and part of the banking licensing requirements that if you want to operate in the country, you've got to be a member of this national switch. So it provides basically interoperability among all registered or licensed financial service players to switch transactions within the country. And then you've got the international schemes coming in to complement where obviously the national switch cannot provide international transactions. Hence, you find they've been in existence issuing cards and also bringing merchant solutions to small businesses and even large corporates, your hotels, because you still have tourists coming in to various areas within the country. The most popular destination, obviously, being the Victoria Falls and some of the game lodges that are dotted around the country. And you then find the international schemes playing a role, one on facilitating those who want to transact outside of the country. More so now, we've seen an increase of take-up in that space because of e-commerce. A lot more people don't travel, but they would rather order whatever they require online with an international payment card and get their goods shipped in country so they can continue trading. And also some have to provide services for acceptance of those coming into the country holding international cards in order to transact without using cash.
Yeah, and you touched upon it briefly. What's been the impact on the physical banking ecosystem? We've talked about these mobile network providers coming in and opening up rural areas with the unbanked and things. Talk about cards aiming not only at large corporates but smaller companies for merchanting, etc. Did you use the description rigid for some of the traditional banks, or did I mishear that?
Yeah, I think the motivating reason for lack of expansion is obviously the infrastructure cost. Trying to set up a branch in a remote part of the rural areas could be very expensive, let alone maintaining that infrastructure in good form. So the transition of, I think the mobile network operators tested out a model of agency banking, leveraging small merchants within those outlying areas to conduct business on their behalf. And we have also now found traditional banks adopting the same agency banking models. And the regulator also is coming swiftly in that space to ensure there is adequate regulation to protect. I think you mentioned the word trust earlier on in the discussion. Even the people in the rural areas require a level of trust that whoever I'm dealing with is bona fide, is a real agent. And I think the two things combined together have helped put some sanity and give confidence, obviously, to those disadvantaged groups to trust some of these agents that provide financial services.
Yes, that's right. That's great. I mean, what you've demonstrated there is how it takes several stakeholders to come together.
Yeah.
Not just the financial service provider, and you were talking about small merchants, but also the regulator ensuring customer protection and things. I remember hearing a story about how working with small merchants who perhaps historically used to operate almost on a cash basis, it allows then for there to be a record, a credit record, or a record of inputs and outputs, which gets them to the point where they may be eligible for microloans and all sorts. So it's a huge step onto the ladder of access. How would you say that Zimbabwe compares to other countries in the region?
Yeah, I think within the region, Zimbabwe has moved fairly faster, at least in the couple of years. Things have been stable. Inflation has been going down and bringing in a lot of interest in the financial service space. I think we have also seen good developments within our region, SADC community. We are part of a cluster of 10 countries where I work, South Africa being the biggest economy, but outside of that, we've got 9 other countries: Angola, Mozambique, Zambia, Botswana, Malawi, Lesotho, Swaziland, Eswatini. And we've seen, I think, an expansion in fintech players coming into the space, MNOs as well, establishing themselves more strongly in the financial service space. And we have seen a lot of partnerships and collaborations, even from where we sit, partnering in enabling payments, remittances, cross-border payments. So you find someone with a wallet is also able to perform an e-commerce transaction, is also able to receive a remittance directly onto their mobile wallet. So I think there's been a good pace. Zimbabwe has kept up with the pace of development within the region, and we're seeing a lot of launches across our region of various players, whether it's fintech, whether it's MNO, telecom space, or rallying towards addressing this financial inclusion question, as well as ensuring that there is industry innovation and putting up decent, reasonable infrastructure as part of these SDG goals. I think it's really a rallying point from almost every player. There's opportunities that businesses, individuals are seeing in the space.
Yeah, and you've talked about collaboration there and the leading role played because of the cost of infrastructure by the telecoms. People want telecoms for communication, but it also has many spin-offs. Are you aware of any difficulties that have been with collaboration, not necessarily within your own organization, but collaborations between different sectors or collaborations with companies from other countries who may think in slightly different ways?
Yeah, I think the biggest challenge, obviously, is always the legal framework. So that always comes up at the top in terms of doing the due diligence as well. Even the entities themselves that try and collaborate with others, there's an importance in order to maintain that trust factor. Is these two entities or the collaborators really need to do stronger due diligence? There's got to be licensing in place in order to ensure that there isn't any risk that may come into whatever bundled solution or innovation that may be under discussion as a service to the customer. It may be something customers want, but again, it's got to be robust. It's got to be tested thoroughly. So I think that's the other important factor, and also putting stronger agreements in place between the parties that are collaborating. What commercial arrangements are in place, what exit clauses are in place, who is bringing what to the table. It's got to be clear and well aligned for success.
Yes, I mean, I think you've introduced there an interesting additional aspect to the idea of trust. When I was setting the scene, I talked about customers who might be digitally naive. Do they trust the provider coming along and saying, oh, I can look after your money? You can't come to a branch to look at your money because it's in the cloud somewhere. So there's that aspect of trust. But you're absolutely right to note that in collaborations at the corporate level between companies, telecoms provider, financial services provider, whatever, there also has to be a degree of trust in there. Now, the company you work for has a very long and well-established and recognized and trusted brand. The problem for some of these new entrants, particularly fintechs, they're virtually unknown. And how do they overcome this problem of being virtually unknown? And any thoughts on how they may have a good product, but people say, I don't know who you are. I don't know what you're offering.
No, absolutely. And I think one of the important things is always aligning and associating with a better brand than yours. So linking up and collaborating with an established bank and coming up with some sponsorship arrangement via an established bank makes a lot of sense in terms of scaling and building that level of trust. And which is something that we constantly see in the markets, is where a fintech player wants to participate in the financial service space. Regulators, I think in the past, were more stuck on just licensing for commercial banking requirements, which have huge capital requirements that one has to satisfy. But more and more, we've seen them relax that a bit by then insisting, if you're a fintech player and want to play in the financial service space, make sure you put up trust accounts with a registered commercial bank that also supervises those funds and does audit checks on exactly what you are doing with customers' funds. So I think those measures and moves have sort of helped for fintechs that really want to scale, is to associate with a better brand than theirs.
Yes, the recommendation to associate with a better brand, of course, is very strong. But you've emphasized there regulators in terms of protecting these naive potential customers historically would have required large capital coverage and things, which is beyond some of these providers. But partnering and choosing a partner very carefully is entirely the way to go forward. I think I saw somewhere you'd recently been to Prague. I'm not going to ask you what you thought of Prague or anything like that, but just leading to the point, we looked at Zimbabwe, we had a look in the region and things, and picked up some of the things. The grouping is SADC, is it, in Southern Africa?
Yes.
Yeah. Okay. So the kind of things we've been talking about, building customers' trusts, regulators who protect consumers, etc., the challenges of working on different country. When you were in Prague, the idea, according to what was on your LinkedIn's wonderful, was about sharing experiences about customers worldwide, diverse customers worldwide under your company's umbrella. Do you think there are large differences around the world, or do most customers around the world have the same concerns about trust and things? Are we more similar than we are different as we go thinking about digital inclusivity? Because, of course, in the US, in the UK, there are still significant proportions of the population who don't have access to banking services.
Yeah, I think they were quite interesting comparisons that one could pick. And some of them, I think, which we have moved a little bit faster here in Africa, is immediate instant payments, which have accelerated a lot more using the mobile money, the M-Pesa example, which is obviously one of the biggest case studies in Africa, where there is immediacy of payments and transactions from one to another. And when some European countries, obviously, and some other markets, when it's weekend, you can't get immediacy. If you do a transfer on a Friday, you'll get your funds on Monday, on the next working day. So there are those interesting differences. But on a broader scale, there is a lot more that we still can learn from the other countries that are in different continents, things that we obviously picked up when we were all congregated in this one place, and also hearing from different customers in different regions. Some of the solutions they have had to co-develop for the benefit of their markets, and are at a much larger scale than what we are probably doing in our own regions here in Africa. So there are learnings that we can pick on. What can we put in place to scale and have a bigger impact? And some of the solutions that have been crafted are much larger in scale, and also understanding how they've been put together brings into perspective what we could do here as well in our own African landscape.
Yes, I think you touch upon quite an interesting point there. That and in the chat area, Patrick talks about the mobile and beta banking in Kenya, which you yourself mentioned just then, Chester. And incidentally, is one of the things that Iqbal and I talk about in the aspects of global banking module on the Chartered Banker MBA. It's possible to possibly leapfrog or shorten the time by having a look at certain phases, which is the reason why I showed the sequence in the UK. Nowadays, countries don't go through all those sequences. They bypass some of them. They jump over them elsewhere. And it is the case that what we may call historically financial centres sometimes have been a little lethargic. Perhaps the regulators have been too focused on traditional, should we call it, bricks and mortar kind of activity. And it's a two-way flow of things. We shouldn't presume that it's the relatively recent entrants to financial services who can learn by looking elsewhere. The traditional financial centres can learn by looking at the countries that are perhaps a little more nimble in moving. And as you say, I think we can all learn from each other. In your experience, Chester, before we start opening up for questions and comments, so now's the time, folks, for you to start typing something into the chat area. But in your overview, are there any other things that are important with regard to digitally inclusive? What about the challenge of educating customers and things? Do you find that customers want to pull these digital solutions towards them? Are some of them, perhaps it's age related, I don't know. That's mainly because I'm old. Are they resistant to some of these? What about the role of education to try and get people to understand technology and the financial services products?
Yeah, it's quite interesting. You've touched on a point which is a focus of my DBA program right now. Touching mainly on SMEs, on financial, digital financial adoption, and putting in the financial literacy aspect in it, especially where you've got volatile economies, keeping up pace with the VUCA world or deVUCA'd world, whichever one looks at it. But I think this also speaks to the SDG 4 on quality education, which must be considered by financial experts as well, is how do we provide and address the need for financial and digital literacy programs. So I think at that micro level, we may want to get focused. I think at the academic level, as Bangor, you are doing a fantastic job. The Chartered Banker is doing a fantastic job in keeping us up to speed with the knowledge, but I think for the financial inclusion and the digitally naive, we really need to focus on this as one of the SDG goals, on quality education, and really build financial and digital literacy programs to address the gap that we see in these consumers.
Yes, I think that's right. We do like to think that we play our part. We can't be all things to everybody.
Yeah.
And for many of these aspects of financial and digital literacy education for mass market, they're best understood and delivered by in-country providers. But as you say, it relates to SDG 4 about the quality of education. I had seen that you were doing a DBA, and for everybody else now, start putting your questions, please, in the chat. But Chester is a wonderful example of lifelong learning himself. Okay, so when we were setting this up, I had a look to see what he'd done, as well as our Chartered Banker MBA. He'd done another master's, and he's doing this DBA, which is a doctorate in business admin. And from what he's just said, the research area is about financial and digital literacy education, which is you can what was the saying? You can lead a horse to water, you can lead a person to a good product. You can't make them drink from it unless they feel comfortable, they trust it, etc. So yeah, let Chester be an example to you for lifelong learning. The world changes all the time. And Chester, you mentioned the word VUCA world, which is volatile and uncertain, always changing, and we need to adapt to it. So let's have a look. Come on, people, put your questions in the chat area. I see that Patrick talks about digital capabilities and his opinion that regulatory authorities have the greatest role, the greatest leverage, because they have companies who want to come in, and the regulators are the ones who have the authority to issue licenses, etc. And his example in Kenya is that this example in M-Pesa is cited regularly. He says was possible because the central bank issued a license before any other country, African country on the continent. So we may classify that as a first mover. Now, just in passing, being a first mover, of course, can give you advantage. It also can be risky, whether you're a company, whether you're a government. You might move in slightly the wrong direction and somebody comes in behind you where the pattern of behavior is described as fast follower. And we talk about that a lot. And Patrick goes on to say, the other enabler is the government policy, the willingness to provide support. And to some extent, that's not just licensing. It's about encouraging others, perhaps through also the education provided by the state to think about the topic that Chester's looking at, financial and digital literacy. Patrick, are you from Kenya by any chance? Is Patrick still there? No, okay, very good. Now, Rwanda, okay. Yeah, I did see Rwanda on the list of 36 countries. So we should also just explain that we've got representatives from the Caribbean, from South Asia, from Africa, from Southeast Asia, and from where else? Oh, the UK, the US. Now, they were registered. Not all of them will necessarily be able to turn up. Although we've got good attendance at 32, that's good. It's not exactly one per country, but of course we find that people look at these afterwards and get benefit from that. The idea is you hear from some specialist, Chester. I hopefully guide through and give a bit of an insight to what our offerings in Bangor do. Somebody typing here. Okay, so Yaniv Nelson says one of the points touched on was the importance of collaboration between entities to expand or improve financial inclusion. can you say what role public-private partnerships have played in this regard in Zimbabwe? Okay, so a question there for you, Chester. It says, collaboration, I think we'd all agree with that, makes life easier. Why try and invent from scratch when someone can help you? And the question that Yaniv Nelson's asking is about public-private, or are these collaborations usually private-private?
Yeah, so it's a great question. And we here in Zimbabwe, we actually have a legislation that has a body called Zimbabwe Investment Development Agency. We are registered as an entity via it, and so that we also get a few of the benefits of being a foreign direct investor within the country. And this allows, I think the biggest promotion is for these public private partnerships to happen. And a lot of the investments that we have done are really based on us engaging with public entities. There are banks that are government owned that we work with our public policy team. So there are quite a number of initiatives that we look at together with our public policy team in order to develop financial inclusive solutions, whether they be financial services to agricultural, things that have a national interest, or payment gateways that address some of the national challenges that are there. So that's how we've been interacting. And the good thing is there is legislation around it, and there is a body that's set up to assist us to work more efficiently. Because you find within this, we call it ZIDA in short, every department that we need to talk to, we link via that. Whether it's tax issues, whether it's talking to the regulator, there's someone who sits in that office. So it's a one-stop shop, which makes it easy for someone who is a foreign direct investor to easily operate.
Yes, and so Yaniv, I think that's a clear answer. We may often think that these collaborations, as we said earlier, are between private, commercial activities. I come into the country, I associate myself with a better brand than I am, who is known in the country and who has a banking license and has capital adequacy in place, etc. But as just explained, there's a real need to link with what governments are trying to do. And we see in many countries that governments have policies for individual sectors. It so happens that as we're talking, well, an hour or two ago, the UK Chancellor of the Exchequer was making speeches about what the government is, the UK government is going to invest in and encourage other sources of finance to invest in. And that sometimes comes down to individual industrial sectors that they want to. AI, of course, the AI sector is a big thing. But then most governments around the world would like to have investment in that. But it's about this balance, as Chester's, I think, mentioned agricultural sector and the need to provide funding to help local industries grow other than financial services. Bob Souster's there. I can see him. He's he may actually have taught, as those of you who've graduated from the CBMBA, including Chester. Bob had, yeah, there he is. Greetings from Chester to Bob. Bob has looked at aspects of ethics and regulation for quite some time. He says, for the newer, all digital entrants, the key to building trust, the key is getting the basics right with robust systems. One problem is with the dash to penetrate markets, customers will encounter unanticipated problems that the bots can't handle. And of course, when they arise, it's hard to find a human to deal with it. Well, it may not be known to those of you watching and Chester himself, but Marks and Spencer's, a retailer that does offer financial services, but it's not its principal activity, and a number of other providers have had significant problems with their technology. Some of the big banks, the traditional legacy type banks, who've always existed with large networks of physical branches, but are migrating to digital banking, etc. They occasionally have hiccups because they're operating legacy systems, and these legacy systems don't talk to each other properly. And the example with Marks and Spencer's, of course, is this is malicious activity to try and hold the company ransom because we've got access to your databases. And Marks and Spencer's closed down their digital activities for several weeks. Thoughts on...
Steve, I was going to also just quickly comment on the aspect of my CBA experience, maybe to those who are considering enrolling to this program. I can speak on how this program definitely will empower you in terms of understanding UN principles for responsible banking, that you touched on it earlier. And how it also shaped my understanding that financial inclusion isn't just about access. It's really about being responsible access that contributes to sustainable development outcomes. And this integrated framework study that I undertook really gave me the motivation to be where I am at the moment in the way I think when we are looking at business opportunities and making decisions. It's really a powerful program that really shapes the way you think around being a responsible banker, really.
Great. Well, I hadn't got to that part yet, but you've already given glowing testimony to how you found the program. Let me just ask you on that particular aspect, were you able to apply things as you went along before you'd completed the entire program, or did it wait until the end?
A lot of it was now applying them as I went. I used to post a lot on LinkedIn. I used to post a lot on my WhatsApp status of any new insight or any light bulb that comes to mind, so that I remember it and go back to it.
Yeah, and I think that's what we hear from many others. For those of you who are thinking about studying, it's not you have to wait until you've finished your studies before you can apply it. There are ideas that come up as you go along. And the other thing to say is that you build a network of contacts, not only with lecturing staff, but also with your colleagues who are in similar employment situations. These programs rather are very much about blended delivery, some live interactive sessions. I have one tomorrow, which is about managing change with a group, and some pre-recorded sessions. How did you manage to balance the time between being busy at work and also the demands of study, Chester?
Yeah, I think it just requires immense commitment. So it's almost like foregoing other things and activities. When you look at it and do a self-reflection or a self-audit, you will find that there are times that you probably are spending playing social soccer. I'm an avid lover of golf. I've played golf to the lowest level of 2 handicap. So I had to forego some of my weekends of playing golf to self-development. So that's probably the balance, and maybe stretching yourself after hours, after you do your work, just to read a little bit, get into the books. But it's committing. I think for your program, you've defined clearly the number of hours one needs to commit. So if you sort of calculate that into your schedule, you can play golf once in a while, but you no longer do it every weekend.
Actually, we're coming up for graduation on, I've just looked now, the 9th of July, and there will be graduates who come, and I say to them when I meet them, I say, hey, you've been working hard for the last however many years. This is a distance learning part-time program. What are you going to do with that time? And if he's there, if it's a guy and or a woman, their partner has a list of things that they haven't done that they need to do. But the other thing is, people often say, you know, I've really enjoyed the process of learning and exploring, and I'm going to try and find something. And of course, Chester, you are the ideal example of somebody who has found something, the DBA, which sounds fascinating. So we look forward to hearing more of that as that goes forward. I'm just going to draw things to a close by publicising. Naked publicity of our programs. Are there any other thoughts you want to contribute about your own experience of studying, Chester, or indeed about our topic? I think
my last concluding remark is that, to adding on to what we spoke about, studying, it's a lifelong commitment of learning. So once you embark on this Chartered Banker, it actually opens your mind to exploring other tentacles of some of the topics. There were 12 modules that I did, and you find there may be 3-4 areas within those topics that you then want to explore. And for me now, I'm more of an academic researcher. I like to do a lot of research in various problem statements and come up with practical solutions. How can this be put in the real world scenario, and apply it and see what impact it has on a global level. So yeah, that's my parting shot. Thank you very much, Stephen, for this time, and all the participants. And hopefully some will make the choice of taking up this program.
Great, thanks so much for that, Chester. It is the case that when you do something, studies, you find, Chester mentioned he did 12 units. Some of them you'll think, oh, I've done this before, there's not much to learn. Or some of them, oh, this is very difficult because I've never done it before. But whatever it is, there'll be some, and you have the opportunity to try and understand some of the interactions. And I wrote down Chester saying he likes to explore other aspects. And the example of a tentacle, the tentacle, I think, was the word that was used. Yeah, it's a tentacle in two ways. It shows how things draw together, and it also draws you into it. So thank you so much on behalf of everybody who's been here listening and who will listen to it in the recording phase, Chester. Thank you so much. And then just a little bit of promotion. Here we are, Bangor Business School. We have the Chartered Banker MBA, which carries with it the Chartered Banker designation, which is what Chester and more than 1,000 of our graduates have done. Then we introduced 2 years ago the Financial Crime and Compliance, which is not intended to teach people to be criminals. It's intended to teach organizations how to monitor criminal activity and ensure compliance. That the Chartered Banker is globally unique. There isn't another one like it. It's the same with the Financial Crime. An MBA developed by a traditional university. Bangor was founded in 1884. We were the first one in the UK to offer a degree, an undergraduate degree in banking. We've kept up to date with it since, and it carries the dual award of Financial Intelligence Specialist. Our latest offering is illicit finance. And illicit finance is talking about some aspects of financial crime. Illicit finance is about the terrorist segment who aren't compliant. So that's another unique offering. You can take single modules if you'd like to have a taste rather than jump straight in because you will have to forego golf and various other things. And you may say, well, I'm not a golfer, which I must be honest, Chester, I'm not. But you forego other things. So a very honest testimony there from Chester about, you have to forego some things, but then you get this hunger. You get this hunger for research and to find out more. So if you want to find out more, the details are there. Applications are invited for our October intake. You can get in touch on the web link there or send us an email. And it only remains for me to thank you who've attended live and the questions you've posed, and to Those of you who will look at it, do get in touch if you find something of interest. But most of all, thanks to Chester for his very interesting and stimulating conversation. Thanks, Chester. All the best. Bye-bye. Bye-bye. Thanks, everybody.